All right, yo, I want to talk about something very important that could absolutely revolutionize the way that you approach the charts as a trader. And we're going to be focusing on this very large move that Bitcoin has just gotten to the upside. Now, we can see that over the past 3 days now, Bitcoin from the bottom has gotten a total of a 13.5, 13.6% move to the upside. Now, this is quite massive because really, since we were up at the 25K area, this is pretty much almost as much of a move up as this move down was over here in the middle of August. And what I want to talk about today is the concept of buying low and selling high and how we can identify where lows and highs are. Because if we can identify where the low and where the high is, or where price is considered to be low and where price is considered to be high, then we can make some really good trades. Now, this move to the upside actually is a trade that I am in right now. And this trade setup was given over in the VIP Discord in advance, right? We were looking for this long to take place. We did get a bounce from the first tap of the box that we were looking at here. And this trade setup was given on Monday morning when we were doing the live stream where we were coming up with our trading plan for the day. Okay. Now, I was also looking for, after we hit that box specifically, the price to come back down below 18,555 with bullish divergences on the 24-minute time frame for a real move to the upside. And we can see that that's pretty much exactly what did happen ever since we came down and we lost 18,555. We came down below that level with bullish divergences on market Cipher B on the 24-minute time frame, and that is where we have initiated this move to the upside. So let's talk about how we could have foreseen this and what we need to be looking for if we want to catch moves like this. And the first thing that we have to do always is approach the markets and look for lows and highs and identify what is low and what is high. And there's going to be two main things we use to do this. Number one, we're going to be just using our eyes and looking at the price action. And then number two, we're going to be using our indicators. Specifically for me, I like to use market Cipher B. It has a very, very, very high accuracy of timing these lows and highs. All right. Now, if you do want to get into the VIP Discord where we post the levels every single day, you can go to patreon.com/Jason Casper. You can see that not only are we in the long trade from the bottom, but you can also see that we are rejecting perfectly from a level of resistance that was also given in the VIP Discord in the live stream on Monday. And that's where we're finding some resistance. And so, this is what we do in the Discord, right? It's not a signals group, but we do technical analysis and we identify these key areas. So how are we going to determine what is low and what is high? The first thing we are going to do always is we are going to identify a sideways range in the market. Now, a lot of traders, when they approach the markets, what are they looking for? They're waiting for the breakout, right? I can't tell you how many people I see on YouTube and in other places who are traders, and they're like, I'm not going to take a trade until we break out, okay? Until we break out of a resistance or a support. Now, here's why that is a bad approach, right? Trading a breakout is a bad approach. Because if we take a look at the price action, we can see that most of the time, people are always waiting to buy this next big move. But most of the time, the asset is not going to be getting a big move, right? Most of the time, the asset is going to be trading sideways. And a lot of people would say this is choppy price action. This is boring to trade. There's no good trades coming in here. But guys, as a trader, most of the money is made in these sideways ranges. It's an anomaly, actually, that you are going to end up holding a trade for a breakout. Now, this is because, we take a look at these sideways ranges, and if we're buying low and selling high, which is what we're doing, that's what I'm trying to convey in this video, right? If we're buying low and selling high, let's say we sell high, we buy low. We sell high, we buy low. We sell high, we buy low. This last time we buy low, that's actually the breakout, but we didn't know it at the time. So what we have here, if we're always buying buying low and selling high, in this little sideways range, we have 1, 2, 3, 4, 5, 6 successful trades. Now, contrast that to always trying to trade the breakout of a resistance. We would have had, literally, if we were trying to trade breakouts and breakdowns, we would have had literally, one loss as we trade the breakout, one loss as we trade the breakdown, another loss as we try and trade this breakout again, and then potentially another loss as we try and trade a breakdown. And so, instead of trying to chase the price and assume what is going to happen because we're getting a sign of strength, ooh, look at this big move up to the upside, and then bull flag, boom, let's trade the breakout. It's like, no, that's the wrong approach. What we should be doing is we should be identifying where are the highs and lows, and then we should be buying low and selling high. The same can be said about sideways ranges within sideways ranges, right? For example, this entire range that in my red box is on here, we can identify within this sideways range multiple other sideways ranges. So we had this range right here, we had this sideways range right here, and then we had some smaller ones, right? This one right here. And then more recently, we had this one right here, which broke to the downside. And by the way, the short to the downside here, that was a trade setup that we also did give in the VIP Discord over on September 5th, where we were looking to short the high of that sideways range. Okay, so how are we going to determine where these highs and lows are? Okay, what we're going to do is very simply look for highs and lows. Okay, now I'm going to be taking this from more of a swing trading approach. We can see that if we are looking at this whole structure as a sideways range, this move is not that big, right? It's literally just a macro version of, let's say, this move that we got last week, right? It's a macro version of this right here, where we came down to the low and got a big move to the upside. If this range had played out on a higher term time frame, let's say, instead of from August 26th to September 6th, instead of a 10-day or whatever range, if this had been a much larger range, a few months, it's the same type of thing, right? We came to the low of the range and we got a big move to the upside. So if we now zoom out to a higher term time frame, we can see that it's nothing too crazy that we came down to the low of the range and we're getting a massive move to the upside. Look at what happened the past few times we came down to the low of this range, right? Boom, boom, right? Even the first time, although this wasn't the low of the range yet because we hadn't really put in the range. But, really, what we are going to do to identify highs and lows is we're simply going to look at the price action and say, where historically has price put in a low? And when we identify that area, then we are going to be able to identify what is low. And so what I like to do is I like to approach the markets, and I simply just like to draw two lines, and I'd like to get an average of where did most of the highs get put in and where did most of the lows get put in. So if I was approaching this chart right here, and let's say even I was approaching this chart a few days ago, which we have been, right, because we're planning for stuff like that, and I would be drawing out highs and lows like this, and I would say, okay, I will be looking to take short trades if we come back up into these highs, and I will be looking to take long trades if we come back down into these lows. And it's really that simple. And if you do this, you will find that you will have a very high win rate because you're buying low and selling high. And of course, low and high is subjective, right? But we can't identify lows and highs without understanding market structure. And the most simple way to do that is just by looking at the chart, right? Just look at the chart and simply just identify highs and lows here, right? It doesn't have to be overcomplicated, is the point I'm trying to make. Now, once we do this, then we can use a few other tools to identify where price is considered overbought and oversold. Because I'm not talking about scalping here. I'm talking more about swing trading on higher time frames like this. When we are looking for lows and highs, we want confluence at that level. We want some kind of confirmation that price is going to get a reaction at that level. Okay, so the two tools I like to use are, number one, a fixed range volume pull. So you come over here to prediction and measurement tools, come down to fixed range volume profile. You're going to take this and drag it through like this. Boop. Okay. And what this is going to do is this is now going to give us more specific information about what is considered overbought and what is considered oversold. Now, these highlighted candles right here are giving us what is known as a value area. What is a value area? This is where the asset is considered to be a fair value, right? It's not overpriced and it's not underpriced. It's a fair value. And so anything trading within this, you don't really want to trade that, right? Because it's a fair price. You don't want to sell at a fair price. You want to sell when you're going to get more money than you should, right? And you don't want to buy at a fair price. You want to buy when it's on the cheap, right? That's what makes us good traders. We're buying cheap and selling expensive so that we can make a profit. So then what we do is we say, okay, if we see that the price is coming down below this blue line, it's oversold, meaning people are FOMO shorting, and it's gotten a little extreme. It's like, all right, already, guys. All right, we get it. Bitcoin's crashing. You're selling. All right, we get it. You could stop now, right? There needs to be a correction back to fair value, right? It's an extreme, right? The pendulum has swung too far to the short side. And on the contrary, when we come above that line, we can say that, well, the pendulum has swung too far to the buy side, right? People are FOMO buying. It's not really worth this price. We need to have a correction back down to fair value. Okay. And so, we can say when we come down to this area with the box that we drew and price is now oversold below fair value, that's where we should look to long. And price is coming up to our red box and it's above fair value. It's overbought. We can look to short. And then what we do is we look at market cipher B. Now, some people will use the RSI. That's fine. I prefer market cipher B because it gives me much more accurate signals. So what do? I look at the oscillator. I say, okay, is price oversold? If price is oversold and market cipher B is oversold, meaning market cipher B has a momentum wave coming down below that negative 60 line, this to me is a buy on for a swing trade. Now, what are some other things I like to look for? I like to look to see that the 4-hour is oversold. And then I like to see also preferably that the 1-hour has bullish divergences. Okay, bullish divergences. What does that mean? Bullish divergences, that means that as the price is getting lower, our momentum oscillator is getting higher. And if this is combined with the money flow getting higher as well on market cipher B, very, very high win rate. If you have 4-hour oversold, bullish divergence, and money flow coming up on the 1-hour, there's a very high chance that you have yourself a pretty decent swing trade on your hands. And the opposite is true for shorting. If we come into the overbought territory, right, and market cipher B is also overbought above that 60, there's a good chance we have ourselves a good swing trade on our hands. Okay, it happened right here. And at the time, this was overbought because the range was smaller, and so this blue line was somewhere down in here. It happened up here, right? Market cipher B overbought, and there were divergences also on the lower time frames here. It happened here as well, and not only was market cipher B oversold, but market cipher B on the 4-hour has a divergence. Now, if the 4-hour has a divergence, that is a great signal. Okay, and then it happened again up here. Market cipher B oversold. And we can see that from the time market cipher B was oversold, although it did come back into the regular territory below that 60 line, the fact that we have this divergence here, okay, see how it's a divergence? The momentum oscillator is getting lower as the price is getting higher. This means that, yeah, this is very, very overbought, and there's going to be a pretty gnarly correction here, which there was, right? And so we're just identifying highs and lows, and that really is the way we're approaching this. So when people on the internet are getting very bearish when Bitcoin's dumping, okay, and they're like, yeah, could be 13K, could be 10K, could be 3K, we need to remember the context of the market, right? What is the context of the market? The context of the market is, and I was saying this in my videos, saying that we should be, if you've been following this channel, right, make sure to like the video, make sure to subscribe to the channel. I've been saying, look, as we're coming down to this area, I am looking for swing longs in this area down here, right? This is the swing long area for me. That's what I've been saying, right? And the reasoning for that was because we are coming down to the low of a macro range. We should not be getting bearish here, right? We should not. Yes, of course, we could break down from the range, just like we did from this range, of course. But we know, statistically speaking, if we're looking for longs at the low of the range, there's a much higher chance we're going to end up with a winning trade on our hands than if we're looking to short down to 13K, right? There's a much higher probability that we are going to have a winning trade. Why? Because we buy low, we sell high. We buy low, we sell high, right? We buy low. This is low for reasons I can't explain in this video, but this was a key support, oversold on the 4-hour. Sell high, right? And also buy low right here. Market Cipher B oversold. Back down at that key support. So, if we're just buying low and selling high, look at all the winning trades we have in our hands, as opposed to trying to short the breakdown, right? In which case, you would have gotten wrecked, right? And again, this works in every single instance. This is what separates day trading from swing trading, right? If we're day traders, which I am as well, but I'm actually trying to get back more into just swing trading because it's way less stressful. Well, I shouldn't say stressful, but it's less time intensive. This range right here, we can do the same thing except using lower time frames, right? So what we want to do is when we come down to the low of the range, we want to see the 1-hour time frame being oversold. If we're on a lower, smaller range, we want to use lower time frames, but look for the same thing, right? Buy low, 1 hour, Market Cipher B oversold, 12-minute, bullish divergence, right? Bullish divergence, momentum getting higher like this, and the price getting lower like this, So that is how we day trade, right? On these low volatility, this little range right here, a 5% move. I had many good trades in this range simply because buy low, sell high, right? And so this is, I don't want to say the secret, but it kind of is the secret to trading profitably over time, right? You got to identify these levels. Now, of course, these types of trades are only going to show up, what we had probably so far. We might have had 1, 2, 3, 4, 5, 6 potential swing trades since June, right? So now it's September, so that's like 2.5 months or so, 2 months, and we've had 6 trade opportunities, right? So we're not going to be taking these trades every day. But if we are taking trades every day, then we need to look at smaller ranges, right? Now, if you want to learn this stuff, you can check out the course at jasoncaspertrading.com. There's a 25% discount in the description of the video. This course will help you to become a confident, profitable trader because we walk you through everything you need to know step by step so that you can basically stop FOMO trading and stop trading with emotions and actually look at the charts and objectively come to them with a plan so that you can say to yourself, I want to take along from here if given the right indications, and then actually do take along from there when given the right indications. And I've been in this trade for, a few days now, 3 days. And, I do have to say, now, when I took the long, I took it with kind of a small position size. But even still, even given that fact, right, making almost $6,000 in a few days, that's pretty good, especially when I also took this short, which made me about $3,000. So basically this week, I've made a pretty good amount of profits just buying low and selling high, right? Just in this week, I've shorted from the high of this sideways range and then took the long from the low of this more macro range. And just those 2 trades, those are actually I've taken a few scalps too, but those are really the only 2 trades I've taken, the 2 main trades. And, if you just wait for those highs and lows, even if you're not trading with tons of money, which I'm not, right? I think I had about, 4 Bitcoin on this position originally, so about $100,000 on the trade, 50x leverage, 37x leverage, right? So we're talking, I'm not really putting that much up for my margin. If I had gotten liquidated, probably would have lost like what, like maybe like $2,000, less than $2,000 to potentially be making this much money. And the reason I'm using high leverage is because I know these are very, very high probability trade setups. We have the levels known in advance. And so, you know, this has been my strategy, my ticket, should I say, to actually doing this in a way where I can be profitable over time, right? So if you enjoyed the video, guys, make sure to like the video. Make sure to subscribe to the channel. And as you can see, right now we are coming up to an area of, you know, resistance. Again, this middle point of the range. And so this is absolutely an area where I'm going to be taking profits very soon. In fact, if certain things happen, I will take more profits out. And if certain things don't happen, I'm actually going to wait until we come up a little bit higher here. And then, of course, we are looking to take our final target up at the high, right? All right, guys. God bless everybody in the name of Jesus, the Messiah. I pray everybody is very, very blessed. And I'll see everybody in the next video. Peace.